Welcome all to Digital LUNCHEON, hosted by GWP and Gen2, and powered by AssetRush, an innovative event format initially developed by Gen2. My name is Ekaterina Anthony. I'm digital team leader at GWP, and today we'll moderate our extremely interesting session. The goal of our event is to exchange the ideas and knowledge and to inspire the market participants. We target banks, asset managers, family offices, venture capital firms, and other institutional and professional investors. Initially, GWP, LUNCHEONs, and AssetRush were a physical event, and this time it is a digital session. Digital format allows participation from other parts of Switzerland and abroad, and I would like to thank you, all of you, for joining us today. Dear participants, if you probably already noticed it, you will be on mute actually all the conference. To ask your question, you can write them in the question box down on Zoom application. Our today's session will last approximately 50 minutes. Therefore, some of your questions might not be answered. However, don't be upset. We will provide our answers and comments in writing. So please leave your email and host this event together with Tavis Digital, represented by Sandro Bruehlmann. Sandro is a portfolio manager and founding employee of Tavis Digital. Welcome, Sandro.
Hi, everyone. It's a pleasure to be here.
Sandro will provide us with a presentation, and after his speech, we will hold a panel discussion together with Philippe Naegeli, well known to the market as experienced trader, investor, and specialist in structuring strategies and products. Philippe is also co-founder and CEO of Gen2. Welcome, Philippe.
Hello, everyone. Thank you very much for having me.
And our third participant today is Schneebeli, partner at GWP and proven expert with over 20 years of experience in the financial service industry. We also welcome you, Michael.
Welcome to everybody.
So, digitalization and the adaptation of new technologies name. Time to present our participants. We are delighted to have gained additional momentum due to the corona crisis. The most of the promising developments in the blockchain technology is going beyond well-known Bitcoin and Ethereum. In the meantime, a blockchain-driven industry has arisen. Innovative tech companies develop applications and build the infrastructure. This type of blockchain-related companies show hypergrowth and may become the next unicorns and blue chips. The question now is how investors can gain early access to the most promising companies in the ecosystem. Tavis Digital knows the answer and has launched an investment product focusing on tokenized venture capital funds. Sandro Bruehlmann is going to present us with Tavis Digital team experience. As portfolio manager, Sandro is responsible for fund investments as well as direct investments into digital securities. Sandro was instrumental in setting up the world's first fund of tokenized VC funds. Sandro, you are welcome. The floor is yours.
Thank you very much for this kind introduction, Katja, and let me just quickly share my screen with you. Hi everyone, also a very warm welcome from my side and thank you for joining us for today's deep dive into how to invest in the next unicorns of the blockchain ecosystem. I would like to start with a quick introduction about our company. Tavis Digital is an experienced and innovative Swiss asset management company that focuses entirely on the portfolio and asset management of digital and tokenized assets. As a spin-off of Tavis Capital, a well-established traditional asset manager with currently 1 billion assets under management from institutional investors, we are bridging the new blockchain-based and traditional financing world. But what do I actually mean when I speak about blockchain? Well, first and foremost, today I am not going to talk about how or why to invest in Bitcoin. Much more, I am referring to a whole new technology-driven industry. Blockchain technology is much more than just cryptocurrencies which, by the way, are also an attractive asset class. But in fact, this industry is being shaped and built by fast-growing tech companies who are offering innovative business solutions that have the potential to disrupt several industries. Well, I am sure that many of you may have read in the newspaper about the whole initial coin or ICO hype back in 2017 that unfortunately was very harmful to this nascent market, as there were many fraud cases associated with it. Luckily, the market has evolved enormously over the course of the last 2 years, and we see that trust and acceptance has returned. This is due to the fact that we see an increase in security token or so-called digital securities offerings, which are regulated very similar to traditional security offerings. These tokens or these digital securities, they are representing an asset or a security and are therefore subject to very similar regulation as traditional security offerings. For example, in terms of selling restriction of these digital securities. These tokens, they are a recent announcement from, for let's say, PayPal or MicroStrategy, who are investing up to 400 million of cash reserves into Bitcoin, or PayPal, who is going to accept cryptocurrencies as a mean of payment, show that the market has matured enormously. Besides that, we see traditional players entering the market, especially from the financial industry, who are offering brokerage and custody service to their clients. Within the last few months, central bank digital currencies, so-called CBDCs, they have gained additional momentum due to first public use cases in China. Here in Switzerland, luckily, we do not have to worry a lot about the stability of our home currency, the Swiss franc. But in other countries, for example, in South America, your money might be worth less than half in just a few months, which is the so-called hyperinflation. CBDC may help overcome such issues and become more independent of governments and introduce new techniques for monetary policies. Well, when we started 2 years ago, there was no real marketplace to trade these digital securities, except for some ATSs in the US, so-called alternative trading systems, which allow for peer-to-peer trading. However, without the possibility for primary issuance, there will be no liquidity in the market. And what happened this year is extremely impressive. We see fully regulated exchanges coming up in the Southeast Asian region, but also in Europe and the US. These exchanges, they allow for 24/7 global trading of digital securities and bringing in institutional capital, which is needed for this market to evolve. In fact, one of these exchanges in the Asian region is fully tokenized. So the only way to invest in the company is by buying tokens in their pre-IPO. But let's get back to the core topic of today's presentation. Perhaps the most exciting development of 2020 was the very large increase of blockchain unicorns, which are companies valued with a valuation of at least $1 billion US. The list is now at 31 if we include protocols like Ethereum or Cosmos. If we exclude these more cryptocurrency-based protocols, the list is at 16 real brick and mortar companies that are valued at least $1 billion US. And that is exactly where we want to invest in. Fast-growing blockchain-driven companies with the potential to become the next unicorns or even blue chip companies. But how are we going to do this? Well, the answer to this question is and has always been venture capital. Historically, VC has proven to be an outperforming asset class if we look at the top quartile returns of the fund managers. One of the most promising industries to invest in is definitely technologies such as artificial intelligence, machine learning, and now also blockchain. These companies show hyper growth and allow for huge returns. And another important factor that needs to be considered and that makes VC an attractive asset class is the fact that there is a temporal distortion for IPOs. We have seen a declining number of companies going public in the last few years, and the companies, they stay private for much longer. There are many reasons associated with this development, but the most obvious one is definitely the increased burden of administration and regulatory burdens that need to be overcome of these by these young companies. The interesting outcome of this development, on the other hand, is that private market investors, VCs for example, are the beneficiaries, as the biggest part of the returns will be with them. But as we know, there are always two sides to every coin, and VC is a highly risky asset class, which is highly access restricted, as minimum investments start at around $5 million US. Additionally, investors in VC funds, they are usually faced with a lockup period of 10 to 12 years, making it a very illiquid asset class. Probably the most important thing for VC investors is diversification. As stated at the beginning, only the top quartile fund managers can show really outperforming returns, which leads to a high positive skew. Therefore, diversifying its exposure over several fund managers, vintage years, and regions is an absolute must for investors. Also interesting to see, based on empirical studies, is the fact that emerging fund managers are often outperforming well-known VCs such as Sequoia or Google Ventures. When we now go into the blockchain market and look at venture capital there, we see that history repeats itself. Those VCs who were extremely successful during the internet boom in 2000 are now also heavily investing in the blockchain ecosystem, but mostly in later stage rounds. This doesn't come as a surprise, as companies of this ecosystem, they show enormous growth rates. Let's look at an example. Binance, a well-known cryptocurrency exchange, they reached the status of a unicorn within 6 months of operations, and they were profitable. So alongside these well-known VCs such as Sequoia, Founders Fund or Google Ventures, we see emerging fund managers coming out of that ecosystem that are using blockchain technology to overcome some of the disadvantages of venture capital. By tokenizing their funds or their fund units, they become tradable and can be sold for as less as $1, thus erasing minimum investment and lockup period. In addition, these fund managers, they are often former founders of blockchain-related companies and have a great deal access into that ecosystem, even further improved by the fact that they tokenize their fund and thus walk the talk. Well, as mentioned before, there are now over 30 unicorns in that ecosystem, and many more are to be expected. We have seen this already when we compare it with the internet, and we see a lot of similarities that make us believe that now is the right time to invest in this technology. We at Tavis Digital, we therefore decided to launch an investment product that combines the above mentioned considerations when investing in venture capital. Well, by combining the before mentioned aspects of investing in VC and the potential of blockchain technology, one might see a dedicated fund-of-fund approach as an attractive way to get access to this ecosystem. By investing in up to 30 tokenized VC funds worldwide, who are investing traditional equity in fast-growing tech companies, investors benefit from an exposure to over 150 companies in the long term. We at Tavis Digital, we are fully convinced that the traditional due diligence will never go away. Just because we buy a token doesn't change anything in the underlying. Therefore, it is highly important to apply the same traditional due diligence standards as in the traditional world. For example, on-site due diligence of the fund managers, bottom-up analysis of the portfolio together with the fund manager, just to mention a few aspects. Well, at the current stage, most of the traditional and institutional investors, they are either not willing or they are not capable of handling tokens. As a result, they cannot invest in leading tokenized VC funds. To overcome this issue, we have, in collaboration with Gen2, wrapped these tokenized assets into a bankable security using their AMC structure. Investors therefore do not have to handle any tokens at all, and they can easily subscribe via bank transfer without any technical know-how. In such a nascent industry as the blockchain technology or the blockchain market in general is, traditional investment products are needed to bring in institutional money, which will help this market evolve. Investors are aware with these kind of products and often underrated but highly important, they can book them into their existing legacy IT systems. They need to be economical and flexible, and exactly that can Gentoo offer. In addition, it is important to stay dynamic and adjust several processes on the go, a feature that not many service providers can offer. As the underlying consists of tokenized VC funds, which are tradable, investors benefit from an increased liquidity compared to traditional fund of fund in the VC area. So let me quickly sum things up. There is now a unique chance to invest early on in the leading companies of the blockchain ecosystem via a dedicated fund of fund approach. Blockchain technology is much more than just Bitcoin. It has the potential to revolutionize multiple industries, and its business value is expected to reach up to $3 trillion in just the next 10 years. Venture capital and VC has historically proven to be one of the most attractive asset classes, but it is subject to high risk and has some disadvantages that can be overcome using blockchain technology. A dedicated fund-of-fund approach, investing in the tokenized funds only, allows for more liquidity while benefiting from high expected returns and a well-diversified portfolio. Now I hand it over back to you, Katja, and I'm very much looking forward to our panel discussion. Thank you very much for your attention. You're still on mute, Katja.
Thank you, Sandra. Thank you for reminding me. It seems like Tavis Digital has found a perfect solution in providing investors with access to a new type of assets. I think it is a pioneering experience and can be taken as a good example. We can see today, if we look at the traditional big players, it's still not obvious if they are following the trend. So the conclusion I have is that smaller financial institutions could be more agile and develop sophisticated investment instruments. In this regard, I would like to open our panel, and I have a first question to all of you, to all of our panelists. In your opinion, how institutional professional investors look at digital assets? When do you think it will become sort of normal for the majority of market participants to invest in digital tokens? And when institutions will join the club and suggest this type of investment instruments? I suggest, Mikhail, probably you start and give us also a bit of regulatory perspectives on it.
Yes, Katja. So let me probably start with that and go back a little bit over what happened in the last couple of months in the area of regulation. I think it continues to have relatively big hurdles or regulatory hurdles of adapting blockchain projects. So Sandro touched on a number of these items before. So I think currently there's still a lack of understanding among, let's start with the EU regulators, the perception of the regulators of digital assets is, I think, just due to lack of knowledge, lack of education, probably. There is also collaboration between the banks and ECB. There is obviously an industry which is impacted in and seeing some of their fees going away with adapting this new technology. So somehow a lobbyist movement, I would call it. There is data protection regulation, which is highest on the agenda in the EU. There are multiple entry points into the payment network, although most of these offerings are actually supplemental to what we have today and not replacing it per se. Cross-border nature obviously triggers also AML issues. That's one of the key areas where regulators are concerned. And last but not least, for the blockchain project itself, There is a scalability issue as you have to talk to each regulator. There are still inconsistencies. Just looking at the recent EU publication on digital assets, and also the DLT law, which comes into force next year. So that obviously doesn't help to have enough trust and security around for investors to easily invest in those type of new assets. And probably last but not least, I think to move that forward and accelerate the possibility to invest, I think we have seen in the past the very big scale projects. I mean, they didn't take off a long time. They still are on development, or there's still talks with the regulators around the world. That somehow doesn't work. And I think one of the best examples is the announcement of Libra a couple of days ago, that they will start with a scaled down project. It's not anymore called Libra, it's called Diem, as I understand. So that's probably the way of moving forward and have that educational part where regulators feel more comfortable to adapt more specific regulation in that area, and ultimately allow projects to move forward.
So it seems like it's step-by-step approach, and we are somehow in transition phase. So my question then to Philippe, as investors do not want to handle tokens at the moment, and what will be the short-term solution until we get better regulation and investor will be protected better? What may be your overview on how you see this topic?
I mean, it's as Michel says. I think lots of good things are on the way there, but take time, and it's also important that the trust and the stability is granted for that. And I think in the meantime, that doesn't hold anybody off to participate though in this market and develop strategies like Sandro and Tavis Digital did so far. I think it's interesting to see that for us as a bridge builder, we see a lot of projects that we can support, that we can wrap in traditional assets, in traditional securities, to access exactly asset classes like the digital ones here, and of course also others. So I would say, I mean, Sandro, you can certainly share a bit the experience there, how that is for you, and how that is improving also on the investor side.
Yes, definitely. Look, our experience has really shown that there is a huge lack of know-how, as already stated by both of you, and therefore all our first meetings are basically always about educating the investor. Although very time-consuming, I think it's a highly important task, and it is our role to do this. Because that's exactly where an asset manager as Tavis Digital comes into play when it's about bridging the more traditional with the blockchain-based world. And I think that's exactly where we want to be. And we are very early in the market, but it's our duty to educate people and to give them trust into the whole sector. There were many fraud cases associated with initial coin offerings, but this has changed, and it will take a few more time to really change it also in the mind of traditional investors. And therefore it's all about education, and it will take a few years more.
But maybe also to say here that it's also an opportunity for all of us in the investment and in the asset management market, because that's exactly where you can produce products that are maybe basically a bit more innovative than what you usually see, and maybe also go new ways. And I mean, that can be the build-up of a whole new business line and also a business era for that. Yeah. Michael, I guess you've seen a lot of that too, right?
Yeah, absolutely. I mean, the given the current low interest rate environment, I mean, the access to different products, I mean, this is definitely something which is high on the agenda. Nevertheless, so far, I think it's the regulated part where you can invest in digital assets is more or less blocked or reserved to the institutional investors, although they're still reluctant. For retail investors, I mean, the regulators try to using existing frameworks to protect them from investing, but that doesn't work entirely, specifically in the area of digital currencies. That's also why they are kind of nervous, and that's why they are probably a little slow, let's put it that way, of issuing new clear regulation. I think that part is obviously something which also in the Swiss market, we are kind of crypto friendly, we have the crypto valley, but still, I think if I look at projects we're dealing with our clients, that could obviously go much faster. But again, they try to keep the level playing field. They need to see that they protect retail investors, etc. So all these kind of things need a little bit of time. And on the investor side or on the project side, also a little bit of, or not a little bit, enough money to have enough time to be there when it's time, when these things are clearly regulated.
Yeah, I would say that's definitely clear, and certainly that's also why we are here to connect that in a way. But what is the demand now, Sandro, on your side from the investors? I mean, do they see your case that way as well?
Yes, I think they see it that way. As mentioned by Michael, also regulation is a high topic, especially for larger investors, more institutional investors. It's basically all about regulation. And also the security of storing these tokens, that's also a hot topic there. But I think the regulation will get there, because I think the time for crypto cowboys sending money all around the world and trading with a 100x leverage, that time is over. And it's good that it's over, because you won't see a pension fund, for example, allocating even $1 into that market when you have these kind of players there. So regulation is definitely the topic number one that needs to come in place in order for this market to really scale. And the other thing, and luckily that's already here, is the funding for these companies.
I think that we have a good discussion so far, and I just would like to remind our participants that you can ask directly questions and we will discuss them as well. So I have already 2 questions here which I would like to ask all of you, and probably it's even more related to what Sandro is doing. How can one invest in these blockchain funds? And what are the most interesting blockchain companies to invest at the moment?
Well, regarding the first question, how to invest in these blockchain funds, there are many ways to do so. So the most obvious one is you register yourself or you onboard as an investor on an exchange, for example, on Fusang in Malaysia, and there you can buy for let's say $10, you can buy tokens which are representing a VC portfolio. So that's step number one. If you want to invest larger sums into such a fund, you probably need to go to the fund manager directly. There are many fund managers out there who are currently raising additional funds, and they sometimes have a minimum investment, let's say $50,000, and then you receive these tokens. So you can either send fiat money, so let's say US dollar, or you send them cryptos, for example, Bitcoin or Ethereum, and in return you will receive tokens. And each token is representing the exact same VC portfolio there. And option number 3 is you subscribe to our product, let's say, and then you are invested in a full portfolio of tokenized VC funds. And this you can do via bank transfer. So no tokens needed, no cryptos needed, just call your bank agent and you can invest. Then regarding the second question, which are the best companies to invest in right now? Well, without mentioning any names, I would say that the whole digital securities exchanges space is really on the road. And I think It's probably the most hot topic for the next few years, because without these exchanges, the whole market won't evolve and you won't bring in institutional capital. So therefore, definitely digital securities exchanges, but also all the compliance related topics. I mean, for example, if you have our Ether address or our wallet address, you can exactly track our portfolio and you see exactly where we are invested in and at which time and how much we invested. So all the compliance related stuff, or let's say for an audit, it's totally transparent. And companies shaping this part of the industry, they are also return drivers, in my opinion.
Probably on this particular topic, you know, in investing, one of the parts of the investment is obviously the custody of the tokens. So where are they sitting? Obviously in a wallet, but where is the wallet stored? You know, is it wrapped into? Is it kind of stored with a bank? Is it stored with a custodian which has a license, regulatory? I mean, it's all about you know, security and bankruptcy remoteness. Switzerland has embedded that somehow in the DLT law in terms of bankruptcy, that there needs to be segregated wallets. Germany has adopted a slightly different approach that, you know, these wallets should be kept within a licensed custodians. That doesn't need to be a bank. That can be something different. So there is a little bit of a difference in terms of how they approach it. But that's obviously one of the key questions. You know, if I have invested $1 million in VC funds, I have these tokens, I want to make sure that these are securely stored somewhere. And that's definitely one part of the ecosystem which is important. And I think also there is an opportunity for traditional banks, which basically have experience in what they're doing in their infrastructure, to provide that to their clientele.
Maybe just a quick feedback on this topic regarding the security of these tokens of VC funds being stored. I don't see it as a huge issue, and this question always pops up also in talks with investors, because in comparison to cryptocurrencies, these tokenized VC funds, all these addresses, they are whitelisted, so they know who is behind a certain address. And let's say my tokens are getting stolen from our custody provider. That's not an issue, because I can call my fund manager where I'm invested in, tell them, hey, look, the tokens are stolen. Please burn them and send me new ones. So that's not an issue from the digital securities perspective. The topic is much more important for cryptocurrencies, when you send a Bitcoin somewhere and it gets lost. Actually,
a great comment, and yeah, we see that blockchain is getting give us more transparent opportunities, and actually it's beneficial for regulator. I would say regulators should be the first who initiate more activity and support this type of developments. And we have a question about how safe is blockchain from the participant. So maybe just who would like to take it?
Yeah, well, that's also another question that always pops up. In my opinion, it's very safe. There are certain attacks that can be made on several blockchains. I mean, there are different blockchains, and so-called 51% attacks, where one has more than 50% of the total processing power of a blockchain. Then you can actually do whatever you want with the tokens on it. But I wouldn't say that it's not safe. Blockchain is very, very safe, especially compared to other infrastructures that we have. And there are already many companies offering tools that make blockchains even more safe. So I wouldn't say it's not safe. In my opinion, it's totally safe.
Thank you. So we have also a question from our next participant. Hello, what about the cost involved for the investor? So subscription trading costs. I think, Sandro, it's again for you probably.
Well, if the question is regarding our product, unfortunately I can't give too much detail about the fee structure. I can't market it right here. In terms of the other VC funds, if you buy a token directly, usually what you have is the same fee structure as in the traditional VC world. You have a 2-20 structure, so 2% management fee, 20% carry. And that's basically the fees. There are some fees related to trading if you onboard exchange, but these are usually very low because they need the users on these platforms and they need a trading volume there. So they keep fees pretty low.
Okay, sounds good. You know, since we're based in Switzerland, I would like us maybe to talk more about Swiss market and Swiss actually regulation and doing business here. Why blockchain companies should come to Switzerland? And Michael, you already mentioned DOT framework, so maybe you give us a bit more insight into what's going on here in at Swiss side.
As I said at the beginning, I mean, there's a positive development in terms of regulation. Could be a little faster, to be honest. I know it's difficult for the regulator to make sure that they keep a level playing field in the absence of specific regulation. Now that's kind of evolving over time. But you know, apart from being innovative, Switzerland, and apart from having you know, a lot of these tech firms now coming to Switzerland or being established in Switzerland for a while, for different reasons. I know tax is one of the key drivers to come here, but it's also resources. You know, you find here people who really are, you have access to resources here, which you probably don't have in other places of the world. So that makes a friendly environment that makes you, you know, advance probably quicker than elsewhere. But you know, I think to continue to do that and to probably more accelerate that ground for innovation in Switzerland, you need to be able to tap into the financing part of power of Switzerland. You know, we have billions of assets. Our financial intermediaries manage in Switzerland, and they obviously are looking for investment opportunities, you know. And you don't need to go to Asia, you don't need to go to anywhere. You can actually do it from here, and you know, start diversifying more in the tech area. And I think, and I believe, it's not only a financial services topic per se. You know, blockchain technology will ultimately be used by governments, will ultimately be used in administration. There is a lot of benefits to it. And if the technology or service provider comes out of Switzerland, that would be definitely an asset. But again, traditional intermediaries need to, you know, more focus and have an access to investing here. And I think we're back to the education question here.
But as you truly say, I mean, Switzerland is still, at least to my data, the largest asset manager, wealth manager in the world, with over 1.8 trillion, sorry. And we are an independent marketplace, meaning we are not under regulation of the EU, or we're not in focus of the US or of China. So this certainly has an effect. And I always found it's not only that we have legal stability that is convincing and an independent status and a great history of experience and a great market for that. We also, I mean, we are a decentralized country, a small decentralized country, and I wouldn't see any better world to create a decentralized technology and moving forward with it. Yeah.
Absolutely, as you mentioned, Philippe, there's a huge sum of money being managed here in Switzerland. Actually, it's over 20% of the global wealth is being managed in Switzerland. And now if we project that also over 20% of the global digital wealth is being managed in Switzerland, and not see any reason why this shouldn't be the case, then it's definitely a hot place for companies in the blockchain space to be located in Switzerland.
So it sounds really good. We don't have more questions so far from audience, and we're already discussing quite for a while this topic. And then I would like to suggest that each of you maybe give like a final remark for people who would like to get into the blockchain investments or into develop business linked to blockchain. So just and also with maybe being here in Switzerland, what can we advise people and recommend?
Well, maybe.
Sure. Okay, go ahead, Sandro.
Well, maybe as a final remark from my side, I think it's very important to distinguish between just cryptocurrencies and blockchain technology itself. It's not just about Bitcoin and sending some digital money around the globe. It's really a new technology that has the potential to disrupt several industries and supply chain management from the scratch. And I think it's also important to really consider Switzerland as the place to be, because although the VC funding is very low here in Switzerland, it just surpassed, luckily for the first time, the 2 billion barrier. But when we look 8 years ago, the funding for VC in Switzerland was about 400 million. So in the US, most of the funding rounds, the late stage rounds, they are even bigger than the whole funding in Switzerland in the VC area. But although smaller funding here compared to the West Coast or the East Coast in the US, I think Switzerland is an attractive place for blockchain related companies, especially building up all these ecosystems. And there's a reason why, for example, Libra, or how I call Diem, I think it's coming from Carpe Diem, if I'm not wrong, is in Switzerland, not just tax, I think.
I think one of the takeaways I would give is I don't think that both investors and companies which drive a blockchain project, let's call it that way, they don't need to be afraid of regulation. You anyway have a limited influence on that. And that will take as much time as it needs to take. I mean, education is definitely something which is important still, and will be continue for the market participants an important thing to do. But I think you just need to make sure that you can deal with the current regulation. You can have a little outlook on what comes, which doesn't destroy your business case. But technically, I think there's no way around getting into the more regulated world for blockchain. Regulators and governments will not allow that on a big scale. So you need to deal with that appropriately. And I think examples here on the screen show that this is possible. It works. And definitely, I think this is something you need to be in, definitely as an institutional investor, and probably further down the route as a retail investor, as the regulator will allow.
I have a question just before, Philippe, you make your final notes. We have a question from exactly about private investors here. So is your fund only directed to institutional investors? What about the private? Would it be possible for them to invest in your initiative?
Well, yes, private investors are possible to invest in our product, but qualified investors only. So it's not just open for institutional investors, but we need to have qualified investors only in our product.
Great. So I think we answered the question from the audience. And Philippe, now your turn.
Thank you very much. No, I think we all see the opportunities here. I think it's clear to understand that the blockchain world is no longer to be ignored and can show a lot of growth potential for investors for innovators, for people in the business. And yeah, I hope that we can assist Gen2 to build these bridges and to put you in the spotlight with your products and with your opportunities, and certainly to respect also the legal framework that is still about to be shaped and make this easy. So I think the example of Sandro shows quite clearly, and also confirmed by Michael, that there is opportunity and great possibilities for all of us in this situation, while this framework finds its legal balance. So I thank you very much for attending, and I think we come to some more questions if they are. Katja?
Yeah, we can still answer some questions, but let me just conclude that actually we discussed today the attractiveness of blockchain-related companies, possible investment solution, the status of trust among participants, some aspect of regulation, and of course the attractiveness of Switzerland as a blockchain-friendly jurisdiction. The recommendation is we still have to educate the regulator, the market. There are a lot of opportunities, and it should be not ignored. And I really like how Philippe said that Switzerland is like a decentralized place which has a lot of advantages. So I would like to thank you all of our participants, our honored speakers today. The time, of course, is running, and we need to finalize our discussion. So thank you, Sandro, thank you, Philippe and Michael. Special thank you to GWP, Gen2 and Tavis Digital team for your support in organizing this online session powered by AssetRush. Stay tuned and allow us, follow us on LinkedIn and websites for new events and announcements. I hope we will soon see you again in physical presence. And I think it's now lunchtime, and I would like to wish you bon appetit, and please stay healthy, and till next time.
Thank you very much.
Thank you very much, everyone.
Thank you. Bye-bye.
Bye.